Good morning and thanks so much for tuning in. We're a little late to start the Trade Talk conversation this morning, but we are just a few minutes away from trade, so let's jump straight into it. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, we've got very little time to set you up, so let's jump straight into the action. We've got expiry day today, and in fact, the big talking point overnight was the Fed, and Neeraj, I think, has given us more of an insight as to how to approach that from the perspective of the Indian market.
Absolutely. And the kind of volatility we've seen yesterday that is expected to continue in today's session as well. Taking into consideration, as Alex mentioned, it is expiry. So it's going to be an interesting day of trade that we need to watch out for. In fact, just before the show, you heard the management of Tech Mahindra speak to us, our colleague of ours, that's Tushar, and clearly the indication is that this has been one of the toughest quarter that the company has faced. In fact, Tushar is joining by to get us more details in terms of post the management conversation. What are brokerages now making out of it? Tushar, good morning.
Good morning, here. Good morning, Alex. So the brokerages are mixed in that sense. While Jeffries is saying that the negative sentiments or the negative cues will continue for the rest of the year, but Nomura and Morgan Stanley are fairly mixed in that case. They are reckoning that the fact that the margin miss happened due to provisioning, wage hikes, etc. Against that respect, we are also seeing that Tech Mahindra's headcount has reduced by 4,000 odd, and attrition has also eased. Utilization is up. So there is one margin lever that Tech Mahindra might play in the future. Tech Mahindra is also banking on the fact. Tech Mahindra is also banking on the fact that it's banking on the fact that some AI benefits will also come in. The net income has missed estimates due to higher than expected tax rates and everything. Margin has fallen 440 basis points. Both these companies, however, so the biggest pain point, however, is the telecom vertical. But with the new CEO coming in, with the new CEO coming in, they expect a diversification in the revenue mix that Tech Mahindra has. They're heavily focused on the telecom vertical that has shrunk around 10%. But with the new CEO coming in, Mr. Mohit Joshi, who's a BFSI veteran, they expect the revenue mix to be more balanced, actually. Yeah.
Okay, so that's a good point. And in fact, now that we've got Tech Mahindra under the belt as well, we can kind of look at the entire sector and primarily look at the fact that most of the large caps have disappointed. If at all there are bright spots to be had, there's TCS on one side, and you have a lot of the smaller names on the other side.
Yeah, so TCS has done relatively well. It's nothing to talk home about, but they're better than the rest.
Sure.
Wipro was bad. LTIMindtree was also okay. Tech Mahindra, as we got talked about, Wipro is also facing issues.
Sure.
Infosys has cut its guidance severely. Wipro is guiding for a negative growth quarter on quarter. So while to say that FY24 will be a full washout, maybe still far-fetched, but there is a little bit longer than expected slowdown for sure for these companies.
Absolutely. Thanks so much, Tushar, for that. And by the way, this kind of also points to a conversation we had not too long back about the fact that perhaps earnings have not bottomed out for the IT companies, but the prices may just have. So still watch out for these stocks in trade. From the pharma pack, Dr. Reddy's laboratory posted its results. What are the key highlights to watch, Hiral, and what are the key takeaways?
So clearly, the best thing to see in terms of Dr. Reddy's is that the numbers across parameters from your top line to bottom line and margins have clearly beat street estimates, right? So that's one of the positives. And clearly, the pharma pack has been in focus as well over the last couple of trading sessions. Now, what has led to this kind of growth? So it's the strong growth in the US markets that we've seen that has aided this time. Rev limit is something which has actually aided in terms of the revenues as well. Now, what the management has indicated is that there is a strong pipeline with regards to product launches over the next 2 years, which is FY24 and 25. And the single-digit growth that we've seen in the India business, excluding the divestment income from the base. So that's with regards to India. So it's mainly the US markets which have come to the rescue. There has been growth in Russia, and which has been extremely strong this time around, and that is expected to continue as well. And they're maintaining a 25% ROCE and EBITDA guidance. So overall, a good set of numbers. Don't be surprised if you do see a gap up opening, at least, in terms of a Dr. Reddy's from here on.
And the entire pharma pack will also be in focus as well. Several news updates there. The banking pack as a whole has been one to watch, right? Because you are seeing some bit of consolidation, but still a lot of players, a lot of voices in the market, very constructive on private banks in particular. And you had Axis Bank post its results. And it's quite a number also to talk about, right? So we've got Himash joining in to give you the key highlights and what could potentially happen over the next few minutes. But Himash,
Right.
what are the key highlights?
Yeah, so Axis Bank declared their numbers, and the results were largely in line with consensus estimates. Their profit for the year rose 40% to about 5,800 crores for the quarter. And after acquiring Citibank's India's consumer business, the bank noted a heavy 12% increase in operating expenses, and which weighed on the margins and which dropped about 12 basis points quarter on quarter to a 4.1%. As per reports, overall credit growth was better than expected, with retail growth remains healthy, but mortgages segment continues to decline. The SME book declined 6% quarter on quarter due to seasonal factors, but it is expected to do better in the coming quarters. The deposit growth was moderate at 17%, and the CASA mix slipped to 45.5%, which again weighed on the cost of fund side and consequently on the margins. The overall asset quality remains stable, with 80 and 23 basis points decline noted in both gross and net NPAs. Management commentary on the results was positive, as a loan book noting the loan book growth and the broad-based demand for working capital and private capex, which has been quite the talk in this improving macro trends these days. The bank expects repricing to slow down in the coming quarters, and the only one key concern remains is the key managerial personnel attrition, which could destabilize the performance in the coming quarters. But overall, great numbers posted by Axis Bank, and let's see how the stock performs in trade today.
And it's going to be interesting because, we were talking about Axis and ICICI Bank both in the race to achieve the 900. Then we came to the 1,000 number, where ICICI has already crossed those 1,000 levels. Axis has hit a high so far of 980. So whether these numbers come to the rescue for an Axis Bank or not, and how far is it from the 1,000 mark, is anyone's guess. So that's going to be a stock we will be watching out for. But thanks so much for getting us the details. A lot of other stocks, Alex, on the earnings perspective from the broader markets are in focus. In fact, Rishi and Varsha both will be taking us through, a list. Rishi is already here. Rishi, which are the ones that you've tracked?
So firstly, we have Colgate. Their results beat estimates, and it was primarily driven by domestic sales that grew by 12.3%, while its toothpaste also recorded a double-digit growth. So that was something that drove profitability. Then we had Jindal Stainless yesterday. The revenue and profits beat estimates. In fact, profits grew by 45%, and this was again primarily because of a volume-driven growth of 54%. And this was majorly in the domestic market, where the government push on infrastructure and pre-festive season demand picked up. Then we have REC, whose revenue was up by 15.8%, and interest income was up by 14%. Now on the expenses side, finance costs increased by 1,600 crores, but other costs fell as well, so profits also increased. Then we have Aditya Birla Sun Life. The results beat estimates, but this was majorly because of a one-off of other income that increased by 100 crore on account of a negative base in the previous year's quarter. Then we have Schaeffler. The revenues were lower than estimates, but profitability was majorly driven by revenue growth, and the results were more or less as expected. So there was nothing that was out of the...
All right. So we have quite a few stocks to watch out for. Thank you so much, Rishi, for that. In fact, as Hiral was pointing out, we have even more stocks to talk about in terms of earnings as we reach the second half and towards the end of the earnings season. Varsha is joining you with more stocks on her list. Varsha, morning, what are you picking up?
Yeah, so there are a bunch of companies. So the first one is Tata Consumer Products. Now, there was growth in revenue and profit, but it was below estimates. And the growth in revenue and net profit was due to their India business and international business, plus their their branded products. Also, the company's largest tea brands, that is Tata Tea Premium and Tata Tea Agni, recorded strong volume growth during the quarter. The next company that we have is SIS. Now, this company is into security-related services plus cash logistics business. Now, again, the revenues were up, even EBITDA was up. Also, the cash logistics segment continues its strong growth. Now, this was driven by wins in doorstep banking and cash in transit business. Then the next company that we have is Fine Organics. Now, again, you know what is happening with chemical businesses, and in fine organics also the revenues were not that good. Also the profit was also not that good. But FY23, if you see the numbers of fine organics, that was really good, and management had guided that FY24 will not be that good because FY23 was exceptional year. So now the first quarter has come and
The base has been
high, correct. So now from FY24 the numbers will again look good. So FY24 will be muted. FY25 the numbers will be good. Now the next company that we have is Jubilant Ingrevia. Again, so year on year, if you see, the numbers are not that good, but quarter on quarter, the numbers are really good. Now, because of the pickup of growth in the niacinamide business, so good price realization, good volume, but the specialty chemical business was not that good because of the headwinds in agrochemicals. So let's see. I think first quarter and second quarter for the chemical business won't be good, but from
The second
half of FY24 numbers will be really good for
All
chemical
right, so
companies.
A lot of
certainly-
names
Yeah.
to watch out for, but a trend with regards to higher base and FY24 not looking good is something that we've been picking up for a lot of companies. Thanks, Varsha, for getting us the details. But apart from earnings, Alex, a lot of other companies that will be in focus today as newsmakers of the day. Mika is joining us to get us more in terms of which are the stocks that she's been tracking. Good morning, Mika.
Good morning. So first we have Aurobindo Pharma, which has incorporated a step-down subsidiary called Oro Pharma LLC in Russia with an initial investment of $10 million. The subsidiary is to pursue the pharma business operations in Russia. 100% of the new company is held by Oro Active Pharma, and the company is to start the commercial operations once the local authorities accept any regulations that need to be completed. Next is Poonwala FinCorp, which has divested its controlling stake in its financing arm, Poonwala Housing Finance Limited, to pursue its SG, which is an affiliated entity to TPG Global. The post-tax amount that is received by FinCorp is 3,004 crores, and post the sale, Poonwala Housing will cease to be a subsidiary of Poonwala FinCorp. Then we have Mahindra and Mahindra, which has acquired a 3.53% stake in RBL Bank as an investment, and the stake was valued at a 417 crore amount, and the company is considering to invest further, but under no circumstance will the company's stake exceed 9.9%. Next, the government is to sell 5.3% stake in Rail Vikas Nigam via an offer for sale.
Which starts today.
Starts today, yes. And the offer also has a green shoe option of 1.96%. The floor price is set to 119 rupees per share.
Which is an 8% discount to yesterday's trade.
Yes. And then we have Marico, which is to buy 58% stake in Satya Nutraceuticals, and is for up to 369.01 crores. The company currently has 32.75% stake in the company and will buy the remaining stakes of a stake of 25.25% in tranches by May 2025, and it has a 3-year period that it could acquire the remaining stake. Then we have IDFC First Bank, whose AGM is to be held on July 29th, where the board will approve the financial results and also consider a proposal to fundraise in the next 1 year from the AGM date. And then lastly, we have Geo Financial Services, which has initiated a 50-50 joint venture with BlackRock in order to foray in the asset management sector. And both parties will initially invest $150 million each as a part of the joint venture.
And clearly on the back of this, you have a lot of AMCs that will be in focus today. You could see some bit of pressure on the back of competition that could come
I was
in.
going to say, if another mutual fund is not launched in the interim before BlackRock and Geo launch theirs, it will be the 42nd player in a space that is getting even more crowded by the day, and close to 44 odd lakh crore that is handled right now by the mutual fund industry. It'll be interesting to see what position that they take. I think they could go to the passive route in order to drive volumes in the initial period at least. We'll have to see how that pans out. For now, it's a wrap on this edition of Trade Talk. There's a lot more to talk about over the course of the day. You'll find all the live market action right here on BQ Prime.